My top 10 growth stocks for October 2020. Hello everyone and welcome back to my Investing with Antoaneta. In today's episode, we'll talk about my top long-term picks for October. The companies that I believe are the most promising. And of course, my reasons for owning each stock will vary, but don't worry because I'll give you a quick rundown of why I think they are worth your time. Well, let's talk about it. First company is Upwork. Second, Berkshire Hathaway, Nvidia stocks, AbbVie, Alibaba, PepsiCo, Slack, Facebook, Microsoft, Apple, AT&T. And before we get started with today's video, I just want to take a second and give a massive shout out to all the people sending me feedbacks and messages. You guys and girls are the best. Every time I see a new message in my inbox, it makes me so happy that I want to jump right into making the next video. I'm really glad that you enjoy my content and you find it not just useful but also inspirational. If you want to help me growing more, please don't forget to give me a like and share the links with all your friends and family. And if you're first time, don't forget to hit the subscribe button to make sure that you never miss a video. Also, please remember that I'm not a certified expert, not your personal financial advisor. Everything that I publish is based on my own experience and personal research. Just because I see promise in a given stock and I would invest in, doesn't mean that I would be the best choice for you. Always do your own research. Always double check the data before you buy. Never invest in a stock that you do not understand. Okay, now that all this is out of the way, let's get started. Right now, the market is really volatile. Nobody's sure what is going to happen in the short term. But you didn't come here to listen to about short-term investing, did you? No, of course not. On this channel, we are all about the long-term investing. And this is exactly why today I will give you my list of top 10 stocks, long-term stocks for October. I posted a similar video 6 months ago and just before the lockdown, and with all this second wave talk, I believe that it's about time we revisit the subject. You can check out my previous video here by following the link in the descriptions down below the video or up here on the screen. First company we said is gonna be Upwork. We all keep talking about the consequences of the pandemic, the lockdowns, the potential loss of business and the impact of the economy. If people can't go to work, then companies can't do business and things get bad, right? Well, not exactly. Thanks to the internet, people can find work and businesses can source a ton of services without ever having to leave the building. And Upwork is one of the popular platforms where this happens. And if you look at the data, you'll quickly realize that Upwork is one of these businesses that are actually benefiting and growing as a result of the lockdowns. Personally, I got into Upwork this August and I plan to keep adding more Upwork stock to my portfolio as long as it stays under $30-$35 per share. The second company is my favorite, Berkshire Hathaway. If you've seen any of my previous posts, you know that I'm a big fan of Mr. Buffett. I see him as one of the best, if not the number one investor of our time. Given this, my faith in this company shouldn't really come as a surprise, right? Well, we don't invest on faith here. Instead, we look at facts and data. Besides, if we consider the company's past and Mr. Buffett's approach to investing, we might see yet another glorious period of Berkshire in the near future. Beating the market over time is, after all, his specialty. I got into the Berkshire this April and I will keep adding more of the stocks to my portfolio whenever it dips under 250. The third one is Nvidia stock. Everyone who has been here for a while should already be familiar with Nvidia stock, but I'll give you a quick rundown just in case you've missed it. Nvidia is one of the world's leading GPU manufacturers, and given the popularity of video games, they are pretty much guaranteed to remain a profitable business. Their chips are also used in the production of autonomous driving vehicles and artificial intelligence projects. These last few years, the Nvidia company has been doing exceptionally well, demonstrating an annual revenue growth rate of 16.5%. Couple this with a very manageable debt, and you've got yourself a reliable investment target with a bright future. I've owned Nvidia stock since last year, and I'm very pleased with its performance so far. I'm adding it even more now. Let's go to AbbVie. AbbVie is one of the world's leading drug manufacturers, mostly known for its Humira drug. Still, this is definitely not all there is to AbbVie. They have been actively working on diversification and conquering new markets. Besides, despite the popularity of Humira, AbbVie is still a pharmaceutical company, and the majority of its revenue comes from prescription drugs. And I don't know about you, but I doubt people are going to just stop buying medicine all of a sudden. Currently, AbbVie stock is dipping, and this provides an excellent opportunity to buy more of their stock, which is precisely what I plan to do in the near future. It's also worth noting that with their 66.5% dividend yield, AbbVie is one of the best dividend stocks out there. And let's move out of USA. Let's go to China. What about Alibaba stock? The Alibaba Group is China's largest e-commerce business, and they did, of course, make it to the list as well. Here you will find Taobao and Mao, China-based e-commerce for their local customers, Lazada, one of the leading e-commerce platforms for Asia, and AliExpress, the international platform which I'm sure you are all familiar with. Alipay, China's payment platform similar to PayPal, and more. They are also the 5th largest AO company in the world. They are extremely well diversified and are demonstrating excellent statistics. I got into Alibaba stock during 2018, and it was doing really well for a while. Unfortunately, I ended up selling my shares, and I started buying this stock again during July 2020. And why did I sell when it was doing so great? Well, because I fell into the widespread mentality of selling when you go over 100-150% in given stock. After all, that is what almost every experienced investor tells you. But since then, I've changed my opinion on this. Now I think that if a company is doing well, there is no real reason to sell. You can always sell a bit and a bit, never going to sell full amount of it doing well. And let's move to PepsiCo, a dividend stock. People know PepsiCo from Pepsi-Cola, but there is so much more than that. I'll give you a second to try and guess which brands I'm talking about, and then I'll give you a couple of names. 1, 2, 3. Are you ready? Doritos, Lay's, Cheetos, Gatorade. Yes, it's mostly unhealthy food and fizzy drinks, yes. I'm not a fan of eating or drinking their products at all, but financially, they are an excellent and well-established company. They are also really diversified. So even if things go from bad to worse economically speaking, people won't just drop their habits overnight. Besides, PepsiCo pays 3% dividend yield, and they have been increasing the amount they pay out for 48 years straight. I think it's much better than Coca-Cola. I've owned PepsiCo for over a few years now, and I'm delighted with how things are progressing for them. And let's move to something completely new, Slack stock. Now this one is a bit different, and by different I mean that it's a tad riskier than what I usually like investing in. Still, it shows a ton of promise, and it just had to include it in the list. For those of you still unfamiliar with Slack, their platform is essentially a workplace communication tool. I'm preparing a separate video to introduce you to Slack technologies. And let's talk about them. Slack Technologies helps people coordinate their work on projects, send quick messages, leave notes on tasks, and just about everything else that you could want out of a system like this. The most significant upside of Slack is that there is nobody who can stand up to their product. They are miles ahead of any potential competitors and they just keep adding new things to their platform. Besides, they are currently used by over 750,000 companies worldwide who rely on Slack. For the first quarter of 2020, Slack's reported an influx of over 120,000 paid customers, a 28% increase from the previous quarter, which is pretty significant all things considered. I added Slack to my portfolio back in April and I'm happy with their performances. Their balance sheets are brilliant, they're excellent, and yes, I know that it's dipping slightly, but this just makes it easier for me to buy even more. Facebook stock. I don't think Facebook needs a good introduction to you all. Even if this is your very first investing video, I'm sure that you know that Facebook is an incredibly successful and profitable business. Their platform has a huge user base. Facebook also owns WhatsApp and Instagram, two of today's most prominent social media platforms. And while Facebook is most popular with the older crowd, WhatsApp and especially Instagram are there to capture the younger audience. I've owned Facebook stock for quite a while, since 2018, and I personally believe that the company has the potential to catch up to and even surpass the other tech giants like Microsoft, Apple and Nvidia in the future. Definitely a big believer in Mr. Zuckerberg. Let's move to Microsoft stock. Microsoft is an excellent pick for beginners and veterans alike. They are a really well diversified tech company and they are practically everywhere. Software, hardware, electronics, gaming, cloud services and even more. Microsoft has an excellent track record and they were doing very well before the pandemic hit. Once things finally calm down, I expect that the stocks will continue rising in the price. The professional analysis are recommending it again to be added to our portfolios. Moving to Apple stock. iPhones, iPads, Macs and all sorts of gadgets and tech devices. In the investing world, Apple is a well-known and widely respected company that is definitely worth your time. And while the recent volatility also hit them, I see this is an opportunity to add more stocks to my portfolio at a better price. AT&T stock. AT&T is a world-leading telecommunication media, technology and entertainment company. They are one of the largest businesses of their kind in the US and they hold a large portion of the market. As a matter of fact, if you live in the US, you are probably a client of theirs. The pandemic hit them pretty hard and their stock prices are just now beginning to recover. And the way I see it, this makes them an excellent target for long-term investing. Well, we've reached the end of today's video. I know it fell a bit shorter than usual, but believe me, researching and putting this video together took a ton of work. So why not show your appreciation by liking this video and sharing it on social media? If you are new to investing and can't seem to choose a platform, I suggest giving a free trade a try. If in Europe, you can use Etoro or Trading 212. But personally, I love free trade for the variety of options it gives me here in UK. Follow the link in the descriptions to open your free trade account. You need to email me your email address and I can send you an invitation so both of us we can get free stock today, free share today as a bonus. And I'd like to thank you once again for being with me today. I hope you enjoy my list and at least a stock or two caught your interest. As always, if you have any questions, you can ask them in the comment section down below or get in touch with me on social media or by email. If you have some interesting stock ideas for your own, please don't hesitate to share them with the class. I always love hearing from you and I would be more than happy to have a look at suggestions or even make a video about them. Thank you all for watching and until next time, stay green and motivated.